Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Now let's take a look again on the gold market. Well, yesterday reaction mostly was the same on the Forex market. As I said in today's Forex video, that investors were a bit, scared of 1.1 decrease in retail sales. And that was kind of the cold shower for many investors who thought that we're turning up in the economy and stands at the edge of the recovery, inflation is defeated and so on. So we have the soft landing, and currently Fed is already preparing to start easing policies just because everything is turning to the growth. But reality shows that it's not the case, and that particularly was spooked investors a bit, and investors were worried for maybe indeed we are coming to a recession. But it seems that retail sales, it was just one moment in the overall picture of the recession, and it was not hasn't got some drastic effect on investors' mind, so it is too small to just make investors to change their opinion. But if they have take a look at this as we did in our recent few reports, they could see that in fact that the retail sales decrease it actually is absolutely logical and normal episode, the part of the big recession puzzle actually economy is coming to. So whatever it will be, as you can see, currently effect is muting, is halting gradually as market is turning up again. So here we do not have any reasons to change our short-term trading plan, still watching for the 1945-1950 area because market showing solid momentum. It probably has chance to complete it, to reach this level, maybe not this week, but in general it will try to. At the same time, take a look that market currently is flirting with the MACD. This is important for the two reasons. First of all, it might be grabber could be formed here, maybe not today but tomorrow, and grabber suggests taking out of this top and upward continuation. This is first moment. Second moment, you do not need to consider any fib levels below the current level, because any fib levels right there, it will be already with a bearish trend on the daily chart. So actually for position taking you could consider only the same levels that we discussed yesterday. So if you take a look at the hourly chart, mostly you have the same setup that was yesterday that we discussed in the previous session. We said if you would like to take a long position, you could consider taking a long position right there because this is support. The market has to reestablish upward direction based on the trend direction around this level. And currently we have the same, so market just dropped back to the same level and it's turning up again. So if you would like to take the position, you could use this most recent swing. Here you have to control two moments. First of all is breakout of the C points. So this ABCD pattern has to be destroyed, and that will just confirm the market's ability of the moving higher. In particular, we can take a look, we could get here the upward butterfly, this big shape, as you can see here, if we are correct in our suggestion that market could keep going higher. And simultaneously, tomorrow, probably you also need to keep an eye on the grabber. So mostly all the same stuff as on the euro currency. Because on the gold market could react a bit differently. It's just because recession for the gold market, well, it's mostly the positive sign. But because it makes the stronger pressure on the Fed, it forces them to start easing policy, which is definitely will be supportive for the gold, especially on the background of the high inflation. So that's why the gold market could show a bit more positivity compared to the currencies. If this will not happen and market returns back down, here you have to control the B point. So actually the breaking down and raising of this most recent upward action, well, it will be warning sign, and it suggests that maybe market is coming with this ABCD pattern to the OP target, and also we could get here as downside butterfly. But currently, as you can see, is rather active upward action, so it's a nice performance market is showing. So probably it could try to keep going higher. So at least if you would like to take the position, that's the two moments that you have to consider. Besides, it's not necessary to consider 2-4 hour standing stop orders. All you need to do is just control probably these lows. So market have to stay above it and keep going higher. So if market will turn down and break the trend on the daily chart, turning down here, well, in this case probably the bullish context will be destroyed for now, and we will have to wait when the trend will turn bullish once again, or market will form some pattern. So that's actually what we have currently on the gold.